Hi, I'm Jim Jackson, and I'm bonding over bonds with my colleague, Kevin Kaase. Now, Kevin, we had a surprise retirement in fixed income during the month of November.
What?
Yes, the Federal Reserve Chairman, in his testimony before the Senate Banking Committee, retired the word transitory with regards to inflation. But he had a lot more to say than that.
He really did. I mean, he was much more hawkish on this last communication with the Senate Banking Committee. It sounds like the Fed is going to accelerate their tapering moves. And he also discussed Omicron and how that could exacerbate the inflationary pressures out there. I have to say, it certainly creates a lot of uncertainty in the marketplace. And as you know, the market does not like uncertainty or surprises. I mean, you did see this on Friday. This resulted in a flatter yield curve. We did talk about that on the last bonding over bonds. So bottom line is, Powell spoke like he was going to do a rate hike sooner than what we had previously expected.
Sure, and I think we're starting to see that in the pricing of corporate credit. We saw both investment grade and high yield credit spreads widen during the month. Returns in investment grade corporate credit, however, still remain positive because rates fell more than credit spreads widened. But I would note that currently both investment grade and high yield corporate credit spreads are the widest we've seen since the first quarter of 2021.
It's true. But I also like to point out that any unexpected Fed rhetoric like we just saw, new COVID strains, any new surprises is going to drive large asset price movements, as we saw on Friday morning with market moves that we saw.
Sure, and I think it underscores the challenge of managing fixed income through making rate calls or macro bets. We think the best approach with your fixed income portfolios is to first focus on income, manage your duration exposure consistent with your risk profile, don't make macro bets or interest rate calls, and finally, stay invested in fixed income. It is still a time-tested portfolio diversifier. So thank you, Kevin, and thank you for bonding with us over bonds.